In our last review, we took a look at this little triangular pattern right here, and that suggested that another up leg towards our target just above 5400 was going to come along, and you can see our target has actually been met, and it coincides with a reasonable line of resistance running through here that extends back into February, March, April highs last year. So for all intents, we're now suggesting that possibly there is a wave high in place. There's no confirmation yet that it is actually in place. There is scope for this market to continue to push higher, but at this stage we're suggesting there's a reasonable chance it's in place, and therefore a slight decline in price will unfold in the coming days. And again, I stress this coincides with the release of the annual reports by the banks, so it may have been a factor of buy the rumour, sell the fact. So off the lows down here, we've got a wave A, down to a B, and up to a C. You can see wave equality has been met absolutely perfectly right there. Bigger picture, we continue to suggest that there's ongoing upside potential to be had, but in the near term we're looking for a little bit of a decline back into this region down here, 50%, 61.8%, before prices start pushing higher again. Some great upside targets to be had if our analysis is correct. For the patient trader or active investor, we would wait until prices pull back into this 5600, 5650 area for a buying opportunity. If you're currently running a position in this index proper, we suggest at least moving stops up to break even, depending on where you've entered the position. But for all intents, prices have peaked out right here. We're looking for a near-term buy, dip down into the buy range down here, and then some new highs to be made. So all looks pretty good. As I said, no real confirmation the high is in place. That would probably come on a breakdown through 5200, and we'll see what happens in the next few sessions. Banking sector got some annual reports being released in the coming days.